Hi guys, can I tell you it's really good to be back. And I have to apologize for last week, but I think it was just a lot going on between the two shows that I did, and I guess I was run down. But I am back and I am stronger than ever, and I feel like my work has gone to a new level, which I'm sharing with you. So I love the feedback. And we're going to dive right into what's really happening in these markets. And I came across this weekend. Now, I've shown you this. This comes from the Office of the Comptroller of the Currency, the OCC. And remember, I'm happy to give you these links. So you could just call your strategy specialist and they'll send you all the links, or they're posted on here. What are we looking at here? Well, we're looking at derivatives in the FDIC insured banks. I've shown this chart for so long. Can you see what the most recent one is doing? I mean, that is a big spike up. Now, what do we know about the profits that the banks have been making from trading? Can you see that? Can you see that since they started tracking this, and I think this goes back to 2000 or something like that, because that's really when the speculative derivative market expanded. Do you see a spike like that? Now look, on the bottom, derivative notional amounts increased in the first quarter by 42.5%. Now, look, I don't care about the numbers after that, because that is actually reflective of a 89.9% netting benefit. What that means is they take this contract and it's kind of close to this contract. So boom, both of those cancel out. So what I'm showing you here, why don't you almost double that? Because we're looking at about 89, 90% more than what you're seeing here. That scares the Hades out of me. I'm not going to lie. When I saw that, I went, holy crap, because you don't see that kind of price. Or it's not so much the price action, that's the notional value of those contracts. That means that's the trading value of those contracts. Have you seen another spike like that? I'm showing you the entire chart. Now, 98 to 99% of all of those derivatives are held for speculation. That's trading. We are fully in a trading market. That's what all of this is about. It's just all about, It's all about the flow of funds. I wish I could make the central banks not be able to do that, but it is all about all of this garbage. Really, I feel like I've learned so much and have evolved so much in just even the last few weeks. This scares the Hades out of me, because these are speculative derivative contracts in the FDIC insured banks. We haven't seen any kind of behavior like this. What are all those contracts about? And they're like twice as high as that. You might be sitting here going, well, I don't know. But I'm going to sit here and tell you, Wall Street is a big fat lie. I worked in it for a really long time. I worked in the banking so that I could understand the language. I didn't know that's why I was doing it at the time, but it makes a whole lot of sense, so that when I look at things and I read things, I know how to read them. And I'm telling you, FDIC, how safe do you feel inside of your bank? What happened in 2008? Much, not as much as we're looking at in the derivatives in the system right now. What can I say? This should scare the crap out of you. And you're looking at what happens in the spot gold and the spot silver markets. That's also a lie. It is all about a trade. It is not about the real thing. Here, we only deal with the real thing, the physical stuff, not a claim against it or a promise against it. We send you the physical metal. You hold it, you own it, you run zero counterparty risk. But They've had such a good quarter with the tradings, the best half year like ever with all their trading revenues. So what do they turn around and do? Well, I haven't even pulled this story up, but it makes all the sense in the world. JP Morgan kicks off the sale of high grade debt. Okay, why did JP Morgan need debt? Why are they coming out with this huge amount of debt? And they're not the only ones, all the hyperscalers and lots of corporations. They're having their best trading quarter ever. So now let's issue debt. Why? Because you strike while the iron is hot. And right now they feel like this, well, look, I can't put words in their mouth and they didn't actually say this, but the reality is they've had their best trading half year. Let's take on more debt because people will buy it. They will absorb it. And this is how Wall Street makes money. It's not just the central banks that are doing all of this. It's Wall Street that is creating what they want you to think of as wealth from nothing, from debt. And it only works as long as it works. And when I see what I showed you the first time, I mean, that is flippant exponential. That is straight up. Those are hidden bets. What is a derivative? It is a bet. And they cannot convert to the underlying. So all it is a big fat bet. And who gets hurt when those bets go south? You do. That's who gets hurt, not them. Look what happened in 2008. Nobody went to jail. So what do we have? We have a gambling environment. I'm sorry, guys, because I wish I didn't have to say this, but you want to save yourself? This. And food, water, energy, security, barterability, wealth preservation, community, and shelter. You better get it done, because between that first slide and what I'm looking at here, and I'll dig into this a whole lot more, but I'm telling you right now, this looks like a big blow off. And I've been talking for a while now and saying we're in the melt up phase. Yeah, we're in the melt up phase that always comes before the big crash. Let's suck all the wealth out of the population, out of the public, while we can still transfer that wealth. Don't fall for it. Get yourself in a position, a sound money foundation, so that instead of having to fear what's happening, you get to have some of that wealth transfer your way. It's not rocket science. It's just what happens 100% of the time. Could this time be different? Well, they always want you to think this time is different, but is it really different? No, it isn't. It is not really different. And I want you to have ownership. Physical in your possession is ownership. Anything else is not. I'm sorry, but it's just true. And I came across this and I thought that it was really interesting, especially when I saw what they were writing about, because France has pulled 15 billion in gold. See how they give that value to the dollars? How many ounces of gold did they pull? That is far more important than what that dollar number is. But okay, from US vaults and more European countries may follow. Is it a global currency shift coming? Yes, it is a global currency shift that is already taking place and didn't start tomorrow or today or yesterday. It started in 2008 when the system died. It is not an accident that all of a sudden, magically, we have these cryptocurrencies that have no physical presence, but they make them look like gold, right? They want you to think of them like gold. I came across a thing with stable coins, and of course, it was depicted as gold. It ain't gold. It is taking you deeper into a system that they control, and you do not. And you have a choice. We all have a choice. You can do nothing and flow into it and then just live with the consequences. Or we can come together in community, say no, and get redeemable gold back in the system again. If we do not do this, then what we have going forward is like pure slavery. Because the whole function of gold, the way that it was sold to the public, is that it's supposed to hold the labor that you generate today for use in the future at the same level of purchasing power. What a concept. That's how you retire. That's how you educate your kids. That's how you create a life and your hopes and your dreams. Does this do that? Does this stuff do that? A $20 currency, a $20 bill, a $20 note. This is also a note. This is my $10 trillion Zimbabwe note. Take your pick. These are all notes. What's a note? A note is a debt instrument. It's a promise to pay. And they promise to pay you less and less and less. Whether you realize it or not, they are robbing you of the only thing that you really have, which is your time. What else do you have? You have your time. And if the promise was that the money would hold the value of your labor over time, they have failed you. And now going into this new digital system, that goes from permission. Oh, can I access my account? I don't know. If you're sitting out there, have you ever gone into use your card at a store and it was declined? Nope, can't do it. That means you need permission to access that wealth. Okay, you got to do whatever it is that you're comfortable. But never has it been more important than you have that foundation and that layer. And so let's just go to questions now, because I think that this is critically important. All three of those work. You trust the system, stop believing the lies. And George Bowden asks, hello, Lynette. Did you find out more about Rosalind Capital, which is a failed company? And unfortunately, they did not ship out all of the gold. So that gold never did exist. Here at Zang International, we prefer it if you take possession. Now, you can hold it in a private vault, but yours is the name that's on there, and everything is done under cameras. The IRAs, if the gold and the silver is not there, it is why I tell you all the time, if you don't hold it, you don't own it. I personally do not have a gold or silver IRA. I have a lot set aside in both gold and silver. Silver for me is more about barterability for my retirement. If I ever do, I don't really plan on it, but you never know what's going to happen. Yeah, I do, but I don't have it in a self-directed or any level of IRA because I just don't want it that visible or that known. Remember, if you've got it in an IRA, you're not holding it, are you? So why did they set these things up? IRAs were created in the 70s. They weren't there before that. That was all defined benefit. IRAs were created in the 70s to transfer the risk from the corporations to the individuals. That's why they did it. Now, all of a sudden, you're supposed to be an expert in investments. I don't know. If you don't know enough about how to read that thick prospectus with those itty bitty teeny weeny little letters in there to understand what's going on, I don't know. Could you be taken advantage of? So I will say that if the metals are not there, you can sue, but you're not going to get blood out of a stone. And so, yeah, they just lied. I'm telling you, don't believe the lies. Zang International, we ship it to you. Now if you're executing the rest of the strategy, there are some other options, but I'm telling you, it's in your name privately, not our names, not our vaults, yours privately. And Neo the Wise asks, it seems they have found a way to continue the currency cycle with stablecoin. Well, that's what they're trying to do. Folks still have confidence in dollar. Why do we think that they can't keep it rolling like in Y2K 2008 and 2022? So let's look at the dates that you put in there. And number one, the reason why I think that they can't keep it rolling like they have since they went into a pure debt system, which was in the 70s, is because you're smarter than that. And because that confidence is getting lost. And because aren't we building a strong community foundation to take our power back and get gold and silver back in the system again? I know we had Ron Paul. I know that we have G. Edward Griffin, and they've been the voices since that period of time. But there are more and more voices that are being heard by more and more of the public. Because in the 70s and earlier on, there was still a level of purchasing power that was left. Now, yeah, they're bringing in the stable coins, but what are the stable coins? They're supposed to be backed by the dollar to keep this thing going, when the reality is, I don't know what I did with it, but anyway, the reality is there's no purchasing power left on that. Can you please pull up the purchasing power chart? So this is very, very different than where we were in the 70s, where we still had another 24 cents left out of that original dollar's worth of purchasing power. So what happens when it goes to zero? And really, I use this chart all the time so that people can see how little the purchasing power is. And then, yeah, go ahead and, okay, let's just show the last year, because that'll show what's still happening. Here, go above that, just says 1Y. There you go. Okay, and put that on the screen. Okay, so if you move it over a little bit, because on my screen I can't see all of it. I see it going up, but it kind of blanks at June. Does it blank at June for you guys? Yeah, there you go. That's great. That's perfect. That's perfect. Now, that gap was when the government was shut down, and so they weren't reporting everything. Notice that we've gone up a little bit, but we still haven't hit the 3 cents. One thing that I found so interesting in this purchasing power chart was when they broke 3 cents, it went back and forth for a minute. So one day I would go in there and it said 2.9 cents. Then it would go up back above 3. So now you look at it. Have things gotten cheaper for you? No, they have not gotten cheaper. So officially, we have 2.99 cents out of that dollar. What happens when we get to zero? What happens? The other thing that I want to show are those two charts for delivery that Tom said he put in the queue. So you could take that one off. Okay. So I want you to look at the purchasing power and realize how close we are to the end of that. People are noticing. People are
users.
The two new ones that he loaded up. User is not. It's the people that are taking possession of the physical, even as the spot market is doing its volatility thing. No, not that one. It's Tom just loaded them. It's the people that are pulling the physical out of the markets. He said that he just loaded those two up. The ones that we sent to Canadian Prepper. Okay. So Jessica will pull those up in a second. But the reason why they can't keep rolling it is because there's virtually no purchasing power left, and that confidence piece, because what we're going to see, I know we're going to see it. So, I can't guarantee anything because that's way beyond my control, but I do believe that we are seeing more rapid inflation. That hurts the confidence levels even more. So you had fear back in Y2K and 2008. That's when the system died. So how did they keep it looking alive? I'm out of these. But the way that they kept it looking alive was really simple. They just covered it over with a whole lot more debt. That's why it was getting all conked up. They just covered it over with a whole lot more debt. Well, we're already at a level. There we go. I'm not saying that they can't grow even more debt, because they can. They're buying their own debt. We've already seen a reversal at the Federal Reserve from running off that balance sheet to growing it again. That's the one. Exactly. There's your gold inventory. You guys are watching the spot market. Stop watching the spot market. Look at the inventory. That's going to tell you a whole lot more than what a trader happens to do today or what catches that shiny object over here. Oh, let's go over here. Oh, let's go over here. I mean, look at the gold inventory. This means that there are a lot more claims against that gold than the gold that they have to deliver out. And as long as it's a fractional reserve system, right? As long as the claims don't exceed the available gold for delivery, they can keep this secret hidden. But call us. We'll give you the link. Well, let's make sure that the link is below. You don't even have to call us. We'll give you the link and watch this. And look, if we suddenly magically get all of this huge inventory and people are wanting to sell off their physical gold, that's just not true. That's not what's happening. They use the spot market, which is just a trading vehicle. That's all it is, to hide this delivery. This is huge. Because when demand exceeds claims available to pay that demand, the system has two choices. They can honor the claims or they can change the rules. And history shows us they always change the rules. They're not prepared to honor the claims. So if you're going to watch something, watch this. Don't watch the spot market. The spot market's a lie. Why would you believe the lie? And that's also why I don't think that first of all, we make the assumption that they want the system to continue. But what are they doing? They're building in the rails to maintain control. Will they voluntarily give up control? No, why would they? That's ridiculous. Look at all the wealth that's transferred their way. But we could take back control. And that's what we have to do. That is why I'm still working today. That's why I'm still here, because it is critically important for the future of our children and our grandchildren and our great-grandchildren that we retain our freedom. And it's really interesting as I've been doing all of this work, and I hope you've noticed the shift, and I hope you feel like it's getting better, because it's so important that you understand this at this level, at the heart level, not just the head level. And hopefully some of this work will translate to help you build that army out there, because that's what we have to do. That's really the job at hand, is to build the army that demands sound money back in the system again. And it's easy to do. All you really have to do is convert your fiat, your garbage fiat that they're destroying intentionally, into sound money, gold and silver. I've been guilty of this. I'm creating a new habit for myself, because just like you, I was trained to call this money. This ain't money. It's a Federal Reserve note. It's debt. It's currency. And currency can make things look normal, but it does not hold value. And you know that. That's what inflation is. And if you don't have something to protect yourself against that inflation, then you are a victim of that. Don't be a victim. Come together. There's power in numbers, and we can do this. It's been done before. We can do it again, but we have to do it. They are not going to volunteer it. It's that confidence piece. It's the fact that there is no more purchasing power left in the system. Yep, they'll bring in the stable coins. They're totally working on that. But that won't fix the system when that loss of confidence occurs. So we're racing against the clock. We need to get enough people here. And remember the dime cards. Remember the dime cards. I'm going to re-record this landing to it. We'll probably do that next week. But remember, if you're a client, you get the first one for free, and the rest of them you get at our cost, because we need you to build the army. We need you to go out there. People will look and go, well, those are the same things. No, the one pre-65 is actually silver. The one after, it's just garbage. It has only face value. That's it. And what can you buy with 10 cents today? But you can still buy a cup of coffee with the pre-64 dime. It holds the value of your labor over time. So now that I've had this epiphany, and I this is one guarantee that I will give you. I will always try and figure out how to do this better, to be more clear, to give you the tools that you need to build this army for all of our protections. We have to take our power back. I don't see any alternative. And I don't see any other way than redeemable gold in the system. I just don't. I wish I did, but I don't. So Ernest DeBella, rock and roll hoochie coo, and hot rock and roll doom loop hoochie coo, assuming the recent 120 ounce high for AG was the repositioning of the paper contract, and it's coming back down for now. When China bans paper contracts on the 24th, will it kill paper gold? And can we see the same run up play out? Well, that is certainly a possibility, and that is definitely something to pay attention to, because we've had this control for a long time, and it was an agreement that started, the spot gold and silver markets were really born in the 70s, in the early 70s, and their job was exactly to create this huge paper market that would control the visible price and the volatility that you see, and therefore keep you away from the physical markets. But that's not true in the East. And look, I gotta say this, because I really haven't seen the Chinese government really give a crap about their population as much as them remaining in control. However, I think when it comes to metals, I think the real thing is about China, about the BRICS nations, about those countries taking over financial control. And they do it with gold, because gold always has been what garners that confidence. And so, yeah, we've been moving toward the paper market predicting price to the physical true supply and demand market, showing the true value. We're getting there. This is another step in that reaction. And let's mark this on the calendar and make sure I have that on my PowerPoints. Thank you, Ernest. And math trig 8513. Trigonometry was not a strong suit of mine. But good afternoon from Boca. Oh, I was just there. Not a question, but I hope you make it back to Palm Beach soon. We missed you this time around. Well, make sure that you let Rick know that you really want me to come back. And if he does it in Boca, I will be back. But I can also tell you that I will be, I think, in Orlando, the George Gammon event next May. And I'm pretty sure it's May 8th, but don't hold me to that. So I'm coming back to Florida. And I lived there for a long time. I love Florida. And every time I go there, I kind of miss it. So, and so now you might ask me, well, why did you leave Florida if you liked it so much? The reason why I left Florida is because when I would come here to Arizona, it was kind of like somebody would turn on a light on my daughters, and they would brighten up, and they loved being around family. And my parents were older, so I wanted them to know my family. That's why we moved. If it wasn't for that, though, more than likely I'd still be living in Sarasota or somewhere in Florida anyway, because I really liked it. So we'll see ya. I'm coming back. And that's already guaranteed, even if Rick doesn't have me back, but I hope he does, because it was a phenomenal event and I really enjoyed myself. And Pedro Manana asks, what do you think will be the effect of the 140% margin on the Chinese gold paper market? When do you predict the price to be set in China? Well, it's not easy for me to do the predictions, but why don't I just do something on that for next week? And then we'll take a look at it together. And Neo the Wise asks, is this what's pumping the stock exchange up, and in turn more investment in stocks from common folks? Oh, duh. And thank you for Gold Bunch And thank you, a gold bunch for your hard work and passion to share the uncovered truth. Here's something else, and we just recorded it this morning, and I'm really excited about it because when I was in Florida and I was doing my work there, and I've actually been in some ways writing a book, but trying to get one published for a very long time. And now I'm actually doing it because that was always like an add-on to whatever else I was already doing, which created bandwidth issues. But I figured out that what I'm doing, and I started it last week and carrying forward this week, is I'm actually writing the book first. And so there are gonna be a few little changes, but you'll notice that the PowerPoints that we'll release next week is episode 1. I'm not necessarily doing them in order, so I appreciate it. It's the comparisons. And what I'm doing is uncovering the hidden monetary truths. That's what I'm looking for. So the first one is basically the difference between money and currency, which is why you hear me going, no, I got to learn a new habit because I got suckered in too. So you should never feel bad for getting suckered in. They know how to do this. They just have things move the same way and kind of appear the same. I've shown you this like a gazillion times. Yeah, here we go. $20 gold coin, 1 ounce of gold, roughly. $20 claim on gold certificate. See that little gold there? $20 bill. Tell me how closely those two bills look alike. This is a Federal Reserve note, though. You can't convert that into gold. It's debt. But for 20 years, they all circulated at the same face value, which means you could take any one of these to the store and they spent the same way. So people thought, oh, these are all the same. So when they took those away, well, it's okay because it's the same. We've had this for 20 years. This is still the dollar. No, this is when they really started to rob you of your labor when they introduced these things. You'll see. But anyway, I'm very excited about it. And I intend to continue it in the next 20 weeks, actually. I have it scheduled for a 20-week arch. So you'll have other things too, but then let me know. Let me know because it is so critically important that everybody understands what I'm trying to show them. And if I get too much improving, I don't know that I'm as effective. So let me know if I'm doing any better. But is this what's pumping the stock exchange up? What's pumping it up is all of this money printing and sloshing around the system, and it's a trading market. And think about that very first chart that I showed you from let me see, we go back to that. I mean, this is such a big deal. I'm digging. I didn't have time to dig into it more, but can we go back to just that one, please? I mean, look at these are derivatives in the FDIC insured space. 2008, I mean, we've blown past that, and they've created all of these tools to make it look a lot smaller. When this thing explodes, there's no place to go because the last time I did this with the netting benefit, I think it worked out to something like 6.8 quadrillion or something like that. This is much higher. So I am looking at this a whole lot more this weekend when I sit down and I just have the time to function in it. But what's pumping the stock exchange? That, because that's how they create new money. It isn't just the Fed. So that was a good job. See, she's getting so much better at it. And she hasn't cried today, have you?
No, maybe later.
Maybe later she'll cry. Yeah, one day, the poor thing, she was in tears. Okay, MLBF8GL. Lynette, we talk about how central banks are buying gold. How much more gold is there for them to buy? When does it all get bought up based on the rate at which it's being bought, turn into more investment in stocks from common folk? All right, let me read this again. Okay, so we know there is an absolute finite amount of gold, and you can put the pyramid on there just to give people a little bit more of a visual, the one that you had before. Okay, when does it all get bought up based on the rate? Well, remember, central banks are not the only users of gold. There are, oops, that's not the one, but okay. That's the one. That's the one. See, so there are, so like you are good. You're doing great. You're doing great. See, I need her to help me with the book. And that's why I'm forcing her to do this with me. Not forever, not forever, but, it's part of her training. And she's doing a great job. Okay, so gold is the world's anchor, but, you can fit all of the gold in an Olympic-sized swimming pool. And so central banks cannot buy up all of the gold. And of course, we don't really know how much they're buying, even though they presumably report it. Here in the US, we have not changed even by a 16th of an ounce since I think 1952. Don't hold me to that date, but I'm probably pretty darn close with that. So you can't really trust that. That's why it's really important for you to have your own gold. Central banks are managing the transition from this. All right, let me back up. Okay. This ounce of gold and silver really created limitations for what central banks could do, because it said there's only so many claims that you can create from the amount of gold that you hold. Now, they did expand it. That's why you see the purchasing power go down even up to 1971, because this is a $1 gold coin. This is a $1 bill. They're both $1, aren't they? But this is probably in the vicinity of, I don't know, if I had to buy it with dollars right now, I don't know, maybe $300, $400, $500, $600. I don't actually really know, but it's something like that. What can you buy with $1? But they're both called dollars. That's how they make the transition. They make you think that it's the same thing. That's why these cryptocurrencies, and that they have to give them a body, or when they draw it, it's gold, silver, platinum, because they want you to think that it has the use of gold, that it's the same thing. It's not the same thing, period. It's not. This is used in 33 places. This is used in one. Please, what is the functionality of this? A trade. Now, stablecoins functionality could be a little different, because what they're trying to do is support the use of this, not the value of it, the use of it. And it backs the stablecoin, which visually is also depicted as gold. It ain't gold. It's not the same thing. So really, what's creating all of this is that same little, it's teeny weeny. There it is. This little 20th of an ounce that used to back $1, after they installed the Federal Reserve, it was $2.40. The same amount of gold, more claims against it. That's what they do. They just keep adding claims and claims and claims. And it can work, as we've seen, as long as the public trusts it. But the higher and the more quickly that inflation occurs, the less confidence that people have in the system. They're breaking promises. Money, the most important function of money was to hold the value of your labor. Have you ever thought of it like that? That's what I get from you guys. You guys think that all I do is give. And I give a lot because it's my responsibility to do it. But what you don't see maybe is how much I get back from you. This is mutual. This is mutual. You force me to look at things that if I didn't have to, I probably wouldn't. But I do have to, because that's my obligation to you. You get to make any choice you want. I just want it to be well educated. I don't want you to take my word for anything, but I don't want you to take their word for anything either, because their job is to lie and keep you in the system and rob you of your time, and not the future time as much as your past time. Because all of that money that you attempted to accumulate, they have stolen from you. Is that okay? And I'm serious. Please, I'm learning these hidden truths, or I'm seeing them in a different light because I'm looking at them from a different perspective. I was trained to prove everything that I say, and that was phenomenal training. And I am truly ever so grateful for that. I really am. But there comes a time when you have to take the knowledge and all of that proof and figure out a way to show people, to tell them a story that can carry them, that can help you understand what I'm really trying to show you, so that we can come together in community and take our power back. That's how I feel I'm evolving. So I don't know, fingers crossed, you'll find out. I'm not keeping anything from you. I'm showing you the good, the bad, and the ugly. And Jacqueline 9155 asks, what's a risk that isn't getting enough attention because everyone is focused on the wrong headlines? Well, that is that risk that you saw in taking physical possession. There are people, the smart money is getting prepared and getting into position by taking physical possession. But the masses, the normal public, is believing the Wall Street lie. So, spot goes up $60, it goes down $60. When I first came into this back in 2002, that was June 28th. I remember that day so well. June 28th of 2002. And at that point, most of the formulas, and I don't create any formulas, I use the standard formulas that are out there. But it was right shortly after that the final formula that I was waiting to confirm, I could see it happening, just like I could see it happening now, that we were at the very end of this currency's life cycle. So that's not getting any attention. Who out there in the talking heads and I mean like the Bloomberg and CNBC and all of this, who is talking about the end of this fiat money experiment? Nobody. Who is talking about things shifting into a new form? Yeah, they're building the digital rails. That is totally happening. And they are certainly talking about the hyperscalers and AI and all of this and all of that. But they aren't telling you what you need to do to be prepared. And they don't tell you the truth, because when you know the truth, you make different choices. Think about it. I've shown you so many times how the average wage in 1913 was $800 an ounce, and a family of four could live on that with one wage earner. I'm not telling you they were super wealthy, but one wage earner, right? And here's the thing. You owned this money. You held it. It was outside of the system, decentralized. And that's why the public had their power, because they were actually holding money outside the banking system. But the banks don't make any money if you're holding real money outside of the system. They prefer this debt fiat currency, because then they make money. But then they make more currency, not money. See? I really am just like you. I got to create new habits. And that comes with being conscious. And that's why the hidden truths of money, that's why that's so important. Because really, once you get the fact that money is really supposed to hold the value of your labor over time, and that you can't go back and recreate that labor. So that means that everything that you worked for up to this moment in time is being intentionally degraded. That should piss you off. It pisses me off. And maybe this is what I've been trying to show you, but maybe I'm doing a little bit better now. I don't know. But do you see why we have to take our power back? Because if everything you hold is in the system, you have no power. And you do right now, you have to get permission to access your bank account. So the fact that you can go to an ATM and at the moment you can take money out or see, you can take currency out. See, I can still get currency, but how much harder are they making it for you? If you walk into the bank and you say, I want $20,000. Oh, well, anything over $10,000, they're going to report. Excuse me. And oh, by the way, if you go to deposit it, we're going to charge you fees for that and we're going to report it. Well, you know where the cash came from because I took it out of the account. And so if I'm turning around and putting it back in, you know where it came from. But they're going to use money laundering or whatever other excuses to make you feel like a criminal for asking for your own currency. And that currency, you know that there's no way you can buy the same amount of goods and services with this in another month, let alone in a year or 10 years or 20 years or what have you. We have to be smarter and we have to be stronger and we have to come together. Neo the Wise asks, do you ever consider paying your employees in precious metals, or is it bound by state and federal laws in any way? Just curious how the system works. No, actually, if people prefer all or part, that is something that we are absolutely putting together. And when we reward people here for extra services, because really we want everybody part of the community and everybody going above and beyond, we give them silver. We reward them with physical metals because that is what we do here. So yes, we're not bound only one way and there are options. And Stacking Surfer asks, Lynette, when vaulting, can pre-33 gold coins be insured at the retail cost of the coin? I do believe the answer to that is yes. However, I am not the best expert on that. So give us a call. Talk to your strategy specialist. They'll probably go to Emerald, I would say, or if Emerald fills in at some point, she's the vice president of operations. So those kind of questions, she has the answers to. And so maybe we can kind of hold that question, get with Emerald, and then publish that on, I don't know, one of the X or Twitter or something like that. It's a great question. But I'm like, I would say I'm 93.7% sure that the answer is yes, because I have a lot of stuff that's insured and it's all insured at retail value because it's replacement value. And Neo the Wise asks, is the dollar value chart rigged then? Are you meaning like on stockcharts.com, the DXY or whatever the dollar is valued against? Because I'm not exactly sure, but okay, yeah, let's put that up. If it's okay, there are several ways that you can value dollars, right? What you're looking at here is $1 against a standard weighted basket of dollars or against other foreign currencies. And so it can be weaker or stronger against those other currencies. But the purchasing power chart, remember, that's from the Federal Reserve, and they use hedonics, which means that, let's say the original food basket had steak in it, but steak became too expensive for the average person to afford. So now they put ground beef in it. Well, maybe that became more expensive for the average person to afford. So then they put hot dogs in it, but they don't tell you that. So they make it look better than it actually is. So I'm not really sure what you're referring to, whether it's just the spot contract price, which is against other currencies, or against how much you can buy. And maybe Neo, you can explain what you're looking for a little bit more, and then I'll come back to it. If I answered it, then fine. But remember, if I give you an answer and it still doesn't make sense to you, that's on me. That's not on you. So just let me know and I will figure out another way to explain it or even do a whole piece on it. And Noreen-Original1 asks, where did the Olympic-sized swimming pool comment originate and how long ago? I don't really know, but we could probably find that out. What we do know is that the Department of the Interior does on an annual basis, runs a report on how much above ground gold and silver, as well as in-ground gold and silver. And so when I'm calculating out, or we're calculating out the true fundamental, the true value of an ounce of gold against this garbage currency, that's what we use here, is from the Department of the Interior. And I think that there probably was at some point an Olympic-sized swimming pool is a standard size. And so that's where it came from, but I can't tell you exactly when or how long ago. But we do publish, and there is on there, on that chart, how many known ounces of gold exist, keeping in mind that gold is indestructible. So it can go from one form. I mean, that's the beauty part of it. It takes energy and labor to produce this. It holds and stores that energy and labor. You see that? And no matter what form it takes, because I could melt this down from coin form and make it into jewelry form, or make it into wires for conductivity, or any other ways. But gold is indestructible. Silver gets used up in the process of utilizing it. So Colleen Allen, 3382. And by the way, Colleen, thank you so much for that incredible comment that you made when I think you were watching some of the Red Pill event. And it was kind of interesting because I went on at Rick Rules on Friday. And I don't know if you guys have ever gone to that event, but I would mark it on my calendar for next year. It was phenomenal. And Jessica's nodding her head. Is that the one you want to go to next year? Okay. It was pretty phenomenal. I'm not going to lie. It was such a great event. And, but that, that you could only see if you attended, or I do believe that you could buy access to it. And those will all be available until the end of the year. So I don't know, you might still be able to watch all the speakers. I wasn't the only one there. Naomi Prince was there. Oh my God, I love that woman. I mean, I really do. We kind of geeked out over each other. And in fact, we did an interview together, right? So you can see that. And then also the Red Pill, but the Red Pill was open to everybody. So I do think that you saw it, and I appreciate those kind words very much. Thank you. Catherine Austin Fitz says to use currency when shopping wherever you are able to do so. Do you agree with her? Yes, I do. Because like the gold created restrictions for governments and central banks and how much debt they could grow and how much currency they could print, this is a debt instrument that does not pay or charge interest, but it is a debt instrument, and dollars go 1.00. Now you can add maybe another zero on there, but that now, because you can hold and utilize cash today, that also creates restrictions around what the banks can do. Now, once we go digital, and you see, you don't need permission to utilize the cash. You do need permission to access your bank account and take the cash out. That's what you need permission for. But you can use the cash. And if you want a big enough battle, even those places where that are refusing to accept cash right now, I mean, you got to pick your battles. Let's get sound money back in the system. I think that's a more important battle to fight. But understand that the cash creates restrictions, kind of sort of similar to the gold that created the restrictions. However, once we go fully digital, those restrictions go away. And, they want you to think that it's more advanced, that it's so much better and it's so more convenient. Everything is always sold on convenience. I'm pretty sure slavery isn't really all that convenient. I'm pretty sure that the World Economic Forum, by 2030, you will own nothing. I don't think you're going to be happy. So, yes, I do think that I use a lot of cash anywhere I can. And quite honestly, if I go into a place and they won't accept cash, I leave. I don't go there. And I tell them, not that they care, not that anybody, I mean, there are places I used to frequent regularly and would still, because I like their product, but I don't like their attitude at all. They don't care about me. I'm not going to give them my business. So yes, I absolutely do agree with Catherine Austin Fitts in this regard. Not in all regards, but I agree with a lot of what she says, and I think she's really bright. And at some point, we might have a conversation. I imagine we would. I mean, I don't know. Deliver Me from Evil asks, so supply and demand no longer drives prices. I'm going to take this because there's a few questions in here. And supply and demand has not really driven prices in a really long time. I know I did some old work on financialization, but I do think that it's probably time for me to do it again. Not this weekend, because I already have my marching orders from you. Plus, I have to do another chapter or episode of the book. But let's make sure that gets set up, because I haven't done it in a while. It's important for you to understand, and I actually think that will help a lot. But no, it's not about supply and demand. It's about how many promises and how much how many trading mechanisms they can create. And that's unlimited. They can create as many contracts as they want to. Having said that, though, it was January of 2005, and I actually have that on a chart where you can see. And you remember when they were shipping in from overseas, especially Europe, the Bank of England, where they were actually shipping over gold and silver to the US. That's when that shift really began, in my opinion. That's when that shift really began, and it'll get stronger and stronger. But they're not giving up without a fight. And so when you see the level of volatility, and look, it's not just in the spot gold and silver contracts that we're seeing this massive volatility. I mean, I can't even remember which stock came out this morning, beat all of the expectations, and dropped 5%. Okay, so this is just a trading platform. It all is. And the prediction markets. Oh, the sky's going to be blue tomorrow. The sky's going to be gray tomorrow. Guess, right? This is not investment. This is all speculation, and we've been evolving towards it. So deliver me from evil. I'm glad that you brought that up, because it shows me where I'm missing, and I will be doing something on the financialization to show you how they did it. But how about comps, amenities in the home? I don't get it. So it depends on kind of what you're talking about. If you're talking about real estate, then comparable sales will still matter. But when you're talking about, you know what? Let me just do this. And I will bring in real estate because it kind of seems like that's what you're asking about, comps, amenities in the home. So let me see if I can help you get it. And by the way, please deliver me from evil. If I do this and you still don't get it, I really do need you to let me know. Please, please, please. And that's true for anybody out there because it is, you have to get it. You have to. That's my job. That's my job. It's not your job to understand what I'm saying if I'm going blah, blah, blah. It is my job to present this information in a way that makes sense to you. That not only do you get it here, you understand it, but you get it here. Because until you get it here, you don't do anything. And that just makes you vulnerable. I'm telling you, I have never seen anything like that. And I've got to dig into that more. I was trying to prove a point with something else, which is why I pulled that up. And that's a go-to for me anyway. And when I saw that spike upward, I just went, holy crap. That is not good. That is not good. That is not good. And Christina Savarsky, 8670. Lynette, eternally grateful, and I am eternally grateful to you guys too, because you could be doing something else with your time and you're here. How will we be able to literally be able to pay off our mortgage without changing our gold for some garbage exchange? You are going to change it for some garbage exchange, but you're going to do it like that. And we've got that exit strategy all calculated out. And I'm going to tell you, there are ways that we can execute that part of the strategy in having it in private vaults near, but that's not mandatory. What you need to have like really, really close is your whole barterable position, because that's what you're going to have to, when you wake up in the morning and the banks have reset and you can't do anything, that's when you need to have access to that cash, your fractional silver, your fractional gold, the different barterable pieces. But you're talking about a mortgage here. And so that takes a little bit more time. And what will happen, what will happen is when all confidence is lost and the central banks attempt to regain your confidence, they will lop off zeros. I can't tell you how many, but I can tell you that most of the time it's 1,000 to 1. And what that means is when you go to sleep at night, you have $1,000 in your account. When you wake up in the morning, there's one there. But while the currency resets, which means the stock markets also immediately reset, so all those markets immediately reset. What typically, and I can't guarantee this, but this is history, what typically will happen is you will have spot gold and silver up at that higher level. It's not going to be fully to its fundamental value, its true value yet, but this is exactly why, no matter what's happening in those spot markets, having the physical monetary asset on your possession is critical. Because if that were to happen, like in Venezuela, we saw the spot market go up 3,500% overnight. So you're going to have to be in close contact, and we'll be reporting on a daily basis with this, but everything's going to have to be scheduled out. And we're already putting in place all of those pieces so that when it's time to execute that part of the strategy, it's smooth. It's as smooth as possible. We will do our best, but understand the time to get prepared is before you need to be prepared, not afterwards or not at the time. And that's why we're putting all of these systems in place right now and working on that. But that's how you'd be able to pay it off. So I'm going to make my life easy. And let's just say that spot's at $1,000. It doesn't matter, 10,000, 40,000. It doesn't really matter, but make my life easy. And it goes up 1,000 times when they do that reset because the currency goes down 1,000 times. That's how you pay that off. And yes, you convert into the fiat. So we convert it, we wire it, you pay it off just like that. Boom, 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 done. That's how that's going to happen. And hopefully we'll have everything set up so that it goes that smooth. that's the hope. That's what we're working toward. And Emma Dupree asks, Lynette, has any politician run on the idea of gold as money, not fiat? Nope, but we're working on it. That's what, remember, the second Monday of every month at 6 p.m. Eastern time, we run the Sound Money Hour. Because if you think politicians understand sound money, they don't. So a lot of the local politicians, and I had this conversation with someone yesterday who has been approaching their local politicians that are running for office, and she's asking them that question. And so she said, one of them not interested at all, another one interested. So understand that I will be working on, and I am working on these educational tools. If you're in your local community, the local politicians that are running, you can get their ear a whole lot easier. Share a dime card with them, okay? Give me a week. I'll do this. I'll refilm this next week. Share the QR code with them. I'm telling you, I'm going to do this in under 3 minutes. You can get anybody to sit for 3 minutes, especially if you're going to give them roughly a 1/10 of an ounce of silver. You can get them to sit for 3 minutes. So I am working on it. Citizens for Sound Money is working on it, and we'll give you the tools to help your politicians understand sound money so that they can run on that foundation. We have to do this. We have to do this. We don't have a choice. We just don't have a choice. And Neo the Wise asks, how can the dollar value go up if inflation is running high? Oh, okay. It's the dollar value. Exactly. Yeah, exactly. So what you're referring to is the purchasing power, and then boop, it went up at the end. They just changed their formulas. That's how it happens. But have you personally noticed that? So it's just the lie. It's when they say, well, inflation is down. No. It is the rate and speed of the inflation that they can control. That's where they can't control it. They're losing control of it. And that's why you're seeing the volatility. Yeah, they just changed the formulas. That's how they can make it look like things are getting better. Just like, can we go back to the purchasing power chart? And I want to focus on first 1933 and then 2008. I don't know. I think you have to go to a specific date. So if you put in 1933. No, not.
Why do I have a zero in
You right, no zeros. 0101. I'm going to show you. It is like this anomaly, but it doesn't make it so. Well, you have that to 2023. Okay. We'd have to go. You know what? I'll put that together for you because that's not really gonna. No, it's not there. If you go January, no.
Okay, ready. Go ahead.
Okay, do 0101 1933. Do 1929. Okay, because that's when that was the run on the bank, and then go to no, it's right there. It's okay. Go to the next one, and then just put in 1934 or 1935. Do 1935. 0101. 1935. Okay. Tab out, like move out of there. So no. All right. Well,
we'll get there.
It would be easy enough. No, it's not. It's not. It would be easy enough for me to pull those up and show you, but it is just kind of an anomaly. It doesn't, have prices gone down? No. Gas prices went down a little bit, but now they're back up a little bit. she's going to get this.
I'm
If
going
it
to
kills
figure
her,
it
she's
out.
going to
Not
figure it.
even kidding.
There you go. There you go. You did.
Cry
That's,
out loud.
look at that. She did it. Good job.
Oh
Good job.
my
See?
God.
Okay, look at this. Now, July 1929. So what happened is the people ran to the bank with their gold certificates to pull the gold out of the system, what they thought was theirs. The system had two choices. They could either honor the claims or they could change the rules. They chose to change the rules. They declared a bank holiday, right? Did you read anywhere in any of your history books that things got so much better for people during the Depression? And yet, look at that purchasing power. It went to the then highest level that it would ever be, roughly 80 cents, not quite 80 cents, about 79 point something cents. Can you put the cursor on that? Because it would tell. There you go. Put it up at that peak. Yep, there you go. There you go, right there. Okay, so it was 79. You have to move some decimals over in here. It was 79.61 cents. That was the purchasing power out of the original 100. And then it went down from there. So that was really the kickoff when they took the gold, the power of the gold away from the public. Here, move that out of the way now for a second. Yep. Because then that next bump down, pretty substantial, when the public could not protect their purchasing power because they had no gold now, just dollars. They still had dollars. They had no goals. That was that 69% overnight devaluation. That wasn't good for people. So did things get better in the Depression? No. You think you could do that for 2008? Because I saw the same kind of thing in 2008.
Want me to try?
You can try. You can try.
All right, give me some dates.
Okay, let's go 1/1/2007.
I think I figured it out.
Yep, I think you have.
I totally did.
Nope, that's 1970. Nope, maybe not.
We're gonna make this work.
We're going to figure this out.
What the? It's fine, you guys. Maybe I have to do it this way on this one. 2008, 2007. You saw
No,
me
it
enter
doesn't. I did see you enter it. Okay, well, we'll just forget about it for
Okay.
now.
All right.
Okay, because the point really is more well made in 33. So how is it that purchasing power went up? It really didn't go up. It was an anomaly because of deflation, right? So it was dollars that were getting absorbed, and that made it look like it was going up. And for those of you that might remember, every single time you went to the grocery store after September of 2008, prices were noticeably higher, 25 cents, $1, $2. People saw it. That's what's happening today. The prices are going up so fast that people notice. They want them to go, there you go, you did it.
I'm trying so hard.
You did it. Okay, here, we could show them the same
Right,
thing
let's
in
try.
2008.
Let's try this. All right. See, I told you. I'm going to get this.
Yeah, that's why I feel the same way about explaining this stuff better and better and creating better videos to help people understand it. When you're committed to excellence and always doing things better, then that's your commitment. And that's everybody here. I would say truthfully, that's how everybody here at Zang International feels. We want to make a positive difference and we constantly want to do things better. You know, for you, we work for you guys. So you can see this is 2008. Does anybody remember that things got so much better? And remember, those gray areas are official recessions. You know, so it's just a change of the formula. That's what's reflective of deflation, and central banks and governments hate deflation. They love inflation because it makes things look like they're going up, makes your salary look like it's going up, makes stocks look like it's going up, makes real estate look like it's going up, when in reality, it's a reflection of the value, the purchasing power value of the dollar going down. This is not money. This is not money. This is currency. This is money, and this is money. This and all of these are currencies. It's all they are. Oh, so that's it for today.
Want to do
It's
one
not
more?
a-
just
yeah,
to-
let's do one
just-
more. Yeah, they're making me do a little less because I'm taking on more work
One more,
elsewhere.
maybe one.
All right. And this is Daryl F&G's. I've been hearing that mortgages will just be recalculated at the post-reset valuation. If that happens, how are we going to pay off our fixed rate debt? Love you much and thank you. Well, you're going to pay it off before that happens. That's what we're going to do. We want you completely out of debt. Even if they I mean, can you see why we have to take our power back? Because if we don't take our power back and we get that reset and you pay off your mortgage, anything is possible, right? Because they can legalize anything where all of a sudden they put more back on you. But if you have enough gold, if you have enough sound money, real money, this is not a problem either. But if we take our power back, and we hold gold outside, enough people, we need 3% of the population, that's all, to hold sound money gold outside of the system, we can take our power back because now we actually have something that's outside of the system and they can't control us. As long as you also have surety, food, water, energy, security, barterability, wealth preservation, community, and shelter. Community is arguably the most important part because that's what's going to push this over and get sound money back in the system again. That's globally, but locally, that's what's going to help you create that surety. There's power in numbers, and we are powerful people. Why? Because we are armed with the truth. You don't know how much I wished I had a voice in 2008 because, I mean, oh my goodness, it was so ripe for it. Occupy Wall Street. That was a phenomenal global movement. But I said it then, I'll say it today as I'm looking at socialism creeping in more and more and more. You don't know what you're fighting for. You're fighting for the wrong thing. Why fight for rent control? How about fighting for money control? What a concept. What a concept. We can do this. I know we can. So let's make it happen. 3% of the population owning physical gold, physical silver, sound money in your possession. You will maintain the value of the work and you will make a positive difference for our children. It's a win-win. And until next we meet, please be safe out there wherever you are in the world. Bye-bye.